Welcome back to Explain the Charts, where we break down the news and chart data to help you make informed trading decisions. Today is September 13th, 2024, and we're taking a look at the S&P 500, traded under the ticker SPY. Recent news headlines highlight a strong rally in the stock market, particularly in the tech sector. The S&P 500 closed higher for the fourth consecutive day, with the Nasdaq Composite gaining over 1%. This surge is attributed to positive economic data, including a producer price index, PPI, that met expectations. Furthermore, continued interest rate cuts by the Federal Reserve are fueling optimism among market participants. Traders are pricing in a 25 basis point cut at the Fed's September meeting, with some analysts even suggesting a larger 50 basis point cut. Despite this positive sentiment, some experts remain cautious, pointing to potential overvaluation in the tech sector and a possible moderation in consumer spending. However, a strong labor market and supportive corporate earnings are providing some stability to the market. Now, let's dive into the charts to see what the technical analysis reveals about SPY's current trajectory. First, let's examine the daily chart for SPY. We can see a clear upward trend in recent weeks, with the index climbing steadily from around 540 to its current level of 559. This upward momentum is supported by a series of higher highs and higher lows, suggesting a strong bullish bias. However, we need to consider potential resistance levels. The 560 level, which was previously a support level, is now acting as a key resistance level. If SPY breaks through this resistance, we could see a further rally towards the 570 level. However, failure to break through this resistance could indicate a potential pullback. On the downside, the 550 level represents a strong support level. This level has held up well in recent weeks, and a break below this level would signal a bearish reversal. We can also see a positive divergence between price and the Relative Strength Index, RSI, on the daily chart. This divergence indicates that the upward momentum may be stronger than the RSI suggests. Now, let's switch to the hourly chart to analyze more recent price action. Shifting our focus to the hourly chart, we can see a more detailed view of SPY's recent trading activity. Over the past few trading days, SPY has exhibited a strong bullish bias, with a series of higher highs and higher lows. The index has successfully bounced off the 550 support level, which reinforces its bullish momentum. However, we can observe a slight pullback in the last few hours, with SPY consolidating around the 559 level. This consolidation phase might be a period of profit-taking, or it could be a pause before the next upward push. It's important to monitor this consolidation phase closely to determine the next direction of SPY. We can also see a positive divergence between price and the RSI on the hourly chart. This divergence suggests that buying pressure may be outweighing selling pressure, despite the recent pullback. Let's move on to the 15-minute chart to get an even more granular view of SPY's current price action. Finally, let's take a look at the 15-minute chart to get a glimpse of the most recent price fluctuations. On this time frame, we see that SPY has been consolidating around the 559 level for the past hour. This consolidation could be a brief pause before a continuation of the upward trend. Alternatively, it could be a sign of indecision in the market, potentially leading to a short-term pullback. We can also observe a slight negative divergence between price and the RSI on the 15-minute chart. This divergence suggests that selling pressure may be building, despite the recent upward momentum. It's important to monitor this divergence closely to determine if it signals a potential change in trend. In conclusion, the current news and chart data for SPY suggest a bullish bias in the market. The S&P 500 has exhibited a strong upward trend in recent weeks, with a series of higher highs and higher lows. However, it's important to be aware of potential resistance levels. The 560 level is a key resistance level that SPY needs to break through to sustain its bullish momentum. Failure to break through this resistance could lead to a short-term pullback. On the downside, the 550 level provides strong support. A break below this level would signal a bearish reversal. It's also important to monitor divergences between price and the RSI on different time frames. These divergences can provide early signals of potential trend changes. Overall, the market appears to be bullish, but it's crucial to remain vigilant and monitor key price levels and divergences.